With Scorpio, I'm going to talk today about 4 key points that the message I want to get across. One key being that we are positioned for district scale growth. So Manhattan is a prolific mining jurisdiction in Nevada. It's one of the tightest densities of historic mine workings in Nevada, historically, with mining stretching back to the mid-1800s. It really is a very exciting district. As Peter said, we're located right next to Round Mountain. We all are kind of in what's quickly becoming termed the Round Mountain trend or the Tonopah Gold trend. There's a couple different names for it, but it is a very exciting place to operate. And really what we're chasing is not a 1 million ounce deposit. We're going for something quite a lot bit bigger than that, and we're very confident that we will get there. And with that, we are fully financed to execute on a 50,000 meter drill program over the next 12 months, and we're well into that today, and we're going to continue to really be aggressive over the next 12 months and really build out on that. We're very well financed. We're sitting on $12 million in cash, and as Peter alluded to as well, it's really nice to be in that position. It's a very unique place to be in junior mining, and over the last 3 years, it's definitely been tough, but it's been a big change, and we're very, very happy to be where we are today. We're also very happy to have a very strong cap table. Ross Beatty and Eric Sprott did a strategic placement towards the end of last year, really put a lot of faith in the project that we have, and it's really positioned us well to execute on that plan. Alongside that, we sold off our non-core asset. It might be an asset that some who are familiar with Scorpio may know, Mineral Ridge. And with the sale of that asset, we're very well positioned to execute on our growth strategy. Last year was also a transformative year because we were able to put out our maiden resource. So that was a 740,000 ounce resource at 1.26 grams per ton. I'll really focus on grade throughout the presentation here because that is the true differentiating aspect of this project. Being able to maintain a north of a gram per ton average grade on an open pit at surface resource with true expandability potential in Nevada really does position us in a very unique position amongst our peers, and it is really the core differentiator of Scorpio's project. 1.26 grams is over double the average grade of a typical open pit resource in Nevada, and you see that and while 1.26 on a world compared to world-class assets or assets around the world may be low, in Nevada it is high grade, and as Peter really touched upon, Nevada is number 1 or 2 best mining jurisdiction in the world is rated by the Fraser Institute. And I think with the current geopolitical climate, there's a very big focus on operating in the US, and it's one of the most exciting parts about operating in Nevada is being in this market at this time with an asset like this, located 10 miles south, and this is the 4th point, 10 miles south or 15 kilometers south of Round Mountain, which is the largest mine in southern Nevada. It's Kinross's 15 million ounce plus producer. They recently extended their mine life as of last week, actually, to 2038 with some underground work that they're doing, and there's some strategic opportunity there in the long term, and I'll talk a little bit about that as we walk through this. I'm just going to be conscious of time, so maybe I'll move a little quicker, seeing where my timer's at, but in terms of goals and milestones, as I said, being very aggressive on drilling over the next 12 months. We're well into our 50,000 meter program. We currently have 3 drills turning in the district today. We're going to work through that 50,000 meters very quickly, and hopefully towards the end of this year, we'll be able to get 2 or 3 more drills out there and be even more aggressive and move beyond that 50,000 meters. There's a lot of work to do. There's a lot of targets. As fast as I have, I'll talk about the different aspects and where we can add mineralization and where we can build out that 740,000 ounce baseline to 2 million ounces by this time next year is our target. And then well beyond that, we see true expandability potential even beyond that 2 million ounces. Other catalysts for this year will be, so with drill results, I'll just say our goal is to deliver results every 2 to 3 weeks to the market. We've been pretty, last year we were typically one time a month we were delivering drill results. We put out some drill results this morning, and we're going to be continuing that cadence over the next couple of weeks, where every 2 to 3 weeks we'll have a press release out with our continuing drill results. We're very fortunate to be operating with a lab that gets our results back in 7 to 10 days typically, so it's we're able to kind of keep that cadence going, which I think to the market in this climate is really key. Modern network. This project has seen modern mining since the 1950s, so there's lots of historic production data, modern network is not a fatal flaw of this project by any means. We have so much history of production, but that said, we do want to put together a modern flow sheet for the entire consolidated asset. And then 3 is towards the end of this year is working towards putting out an updated MRE with that 2 million ounce target, and that's what we're working towards, maintaining that gram per ton, north of that gram per ton grade. I'll just briefly talk about share structure. We have 282 million shares out today. We're roughly 100+ million market cap. We are, as I did highlight, we are very well financed. We still have some in-the-money warrants that are continually being exercised. The majority of those warrants expire in February of this year, so in a month. So when those warrants are behind us, I think we'll be in a really good position to continue to grow. A lot of people often ask, why does this project exist? How were we able to get this? Nevada is such a prolific district. Why is this available, and why does Scorpio have this? And the one thing I'd say is that it was disseparate ownership, which is a common theme in Nevada, where you have lots of disseparate operators, fragmented ownership of a district. But in 2021, Scorpio was able to consolidate the core of the district. Since then, we've added more ground, and we really have built a very strong land package. And we're very well positioned for that 2 million ounce target, but then beyond, we see a lot of potential. Just in the interest of time, I'll again come back to grade. These are kind of the 4 core things that make Scorpio special. You can see this chart here on the right. Shows how the Scorpio asset, Manhattan, stacks up against other open pit mines in Nevada, whether they're development stage or active mines. Obviously, on a scale basis, we're still relatively small, but we do have a clear path to expand that. But beyond that, grade, again, is a key differentiator. And then the fact that the asset is amenable to cyanide, it's non-refractory, it's oxide at surface, low sulfidation epithermal vein deposit, really does make it special. So we're very excited to be in this position where we have the ability to scale an asset that stacks up against its peers in such a great way. I'll just talk about Round Mountain and Kinross. We sit 10 miles south on the same Manhattan caldera as Round Mountain, which is a 20 million ounce plus mine. Kinross recently put out information on their Project X, which is the underground extension of the open pit. That will extend the mine life of Round Mountain to 2038. Kinross does hold a 2% NSR on roughly half of our project. We did acquire half of it from Kinross in 2021. There potentially is some strategic value in doing something with Kinross in the long term, but I'm not going to say that that's a need to have. I think as we've worked through this project, as we've understood the scalability potential, we've really come to the conclusion that there is a much bigger opportunity as a standalone project. But I do highlight that it does sit very close to this, and with that gram per ton grade, the economics of moving ore to Round Mountain is feasible. Now, there's a lot of considerations in there, but in the long term, it does position us very well. Just given the amount of time that I have here, I'll just talk briefly about team. Obviously, I'm a fairly young CEO. I think I've been consistently the youngest CEO that appears on the MIF stage. But I am backed. Our team is very young too, but I am backed by a very strong technical team and set of advisors. So Leo Hathaway, who some of you may know, has worked with the Lumina Group for 25 years, worked with Ross Beaty's Lumina Group, been a part of a number of successful exits, over 10 plus exits with that team. Leo spends 90% of his day on Scorpio. He's very involved. He's our executive technical director. He's also on our board. And Leo's been a great mentor to myself, but also a great technical lead for the company and really driving and the growth of our asset forward. Charles Funk is also an advisor. He's the CEO of Heliostar Minerals, been a very successful gold producer in Mexico, and Charles has been a great mentor to myself, and he actually pushed me to take over Scorpio, which was very fortunate. And then Daniel Coons was former CEO of Ivanhoe Mines and more recently the CEO of Prime Mining, which had a successful exit. And then we have our exploration team led by Harrison Pokrant, who worked with B2 Gold for a number of years, and Thomas Poitras, who's also a very strong operational geologist. So just to finish off under the time, again, position for growth, very aggressive growth strategy over the next 12 months, well capitalized to execute on that. Grade. I'll come back to that over and over again. Maintaining that gram per ton average grade is really key to our growth strategy. And then again, just located in a very strong district and well positioned for growth. So thank you.